Are you a business owner ready to grow your business through content? Or are you a content creator who is ready to transform your platform for real profit? Then you need to be at Grow Your Wealth 2026, hosted by Learn, Grow, Invest. On April 18th, we're bringing together entrepreneurs, creators, and industry experts for a powerful one-day experience under the theme Grow Your Business Through Content Creation. This isn't just another conference. It's structure, it's strategy, it's monetization. You'll get practical tools to build authority with content, to convert your followers into customers, and to position your brand for long-term sustainability. Start your day off with a VIP exclusive breakfast session, then dive into a full day of value-packed content and Q&A sessions, and close it out with a mingle that is designed for real connections. If you're serious about growth in 2026, this is your room. Grow smarter, grow strategically, grow your wealth.
All right, hi everyone. Hope you are doing well. Today we're going to be talking about growth versus income investing. And I wanted to do this video because as we touched on the topic last month in level 2, I thought I'd just do, I guess, a simplified version of that video to help our general, community navigate the idea of trying to choose, one or the other, right? Because you have growth investing, which I'm going to explain in depth, and then I have income investing, which I'm going to explain as well. And then I'll go through some of the things that I think you should consider when you're trying to choose between one or the other. And then, of course, as I was planning this video, I saw that NCB released an article as a part of their market guide a few weeks back, I think back in March, where they were talking about growth versus dividend investing. So I thought I'd pull, some things from what they would have shared in their guide and see how it would, go against what I would have said. Of course, I didn't read it before. I wanted to read it live here. And so I'll go through that. All right. And as usual, if you have any questions, feel free to post them in the chat. I had an interesting comment on my last video. A person said in the comments that I was rambling, so I said to him, my style is my style, but you guys can let me know. I know some of you would probably say, yes, I'm a rambler, but that's how it is. All right. So let me jump right to the meat of it first. And then of course I'll take your questions and we can have a conversation going. All right. So think of it this way, and I'm doing this premise, doing this video assuming that, again, you're a brand new investor starting out on your journey. Maybe you're not sure of what to do. Those are who we do these videos for. All right. So think about it this way. Let's say that you have a lump sum, and we like to start with 100,000 on this channel because it's not necessarily a lot, but it's not a small amount either. And so I think it should, if we can use that baseline to start. If you have less, of course, it can still apply. If you have more, it can certainly still apply as well. If you had a lump sum that you wanted to invest and you wanted to decide on what to do, hopefully this video will help you make that decision. Of course, it's not my place to choose for you. Each person should, make their own choice. All right. So let's start with, I guess, a simpler one. Dividend investing, something we've covered quite a bit here. So if you want to check out those videos on dividend investing, you can. And so there are some things I'm going to assume. But so when you're focusing on income investing, you are approaching investing from a position that you're prioritizing income. All right. So income is what you're focused on. Now, everybody is looking to make a profit when they invest. That's why you invest. The question is what type of profit are you going to prioritize? If you take income investing, your focus is going to be on getting, consistent income while owning that asset, similar to, owning a rental property, right? You're not necessarily concerned about cash flows from that property outside of the rental income, right? And usually maybe if you're trying to offset that your mortgage, so on and so forth, right? So Income investing is focused on cash flow through dividends. This is where you're going to focus on the yield of the investment, whether it's 1%, 2%, 3%, etc. Everybody knows on what my baseline is for income investing. I think you should not look for income investing unless you get to that maybe around 5% mark based on the rate of inflation, right? If it's a dividend stock giving you 1% yield or 2% yield, that may not make sense since you're paying somewhere between 1 to 2% on fees, right? So you invest at 100,000, and what you're saying is that you're finding a dividend stock that can give you a consistent yield, above or around 5%. Of course, you're going to look for different things as an income investor. Your priorities will be different, but that's how income investing works, right? Quite, simple and straightforward to think about. The growth investing is where it gets a little complicated now, because it really just comes down to you understanding what is going to drive the growth of that stock. So in growth investing, how you make money is that you're focused on what is going to cause the stock price to move, right? So let's say you purchase a stock at $1. Let's say it's an IPO, you purchase it at $1. You are hoping that you've done your due diligence, you've made the right investment, and that stock that you bought at $1, by the time when you're ready to sell it, it's worth more than $1. Now, if it goes to $1.50, you've earned 50%, or you have what we call unrealized gains of 50%. So if you bought 100,000 units with your $100,000 and it goes to $1.50, then you have $150,000 or $50,000 unrealized gain. And that's how you benefit from growth investing. Growth investing is a lot more difficult than dividend investing, right? Because usually the dividend stocks are known. It's maybe about 80 to 90% of companies who pay a dividend will pay it consistently. Not all, because circumstances may change. But on the growth side, just because you bought a stock doesn't mean the price will increase in the timeline that you need it to increase in. So growth investing is a lot different. It requires more research. It requires more precision in terms of how you go about selecting that stock, right? So for example, persons might have purchased an IPO. That IPO, if it goes in the opposite direction as in the price goes down, there's no capital gains for you until that price recovers, right? So you have to think about that when you're approaching growth investing. So I typically say to persons, if you want to just kind of ease into investing, start with income or dividend investing. It's not necessarily lower risk, but it gives you a little bit more predictability in terms of some income or return, right? So that will usually help. So think of it this way. If you're trying to build wealth, you focus on growth. If you're trying to build cash flow, you focus on income. All right. Hopefully that first part is clear. Let me see who is here. Chris, you haven't missed much. I've never, haven't been here in a while, right? Chess King says TJH is 20 JMD stock. I don't know. Okay. You just said your messages in pieces. I'm like, okay. Wonder why I said that based on my opinion. And do you have a question there, Chess King Davis? Let me know. See, you kind of said 4 different sentences. Piece it together for me and I'll try to answer your question. All right, for everybody else, good night. So we're talking about growth versus income investing. And so that's what we're going through. And then we're going to look at a market guide that NCB sent out to talk about the same topics. I thought it would be interesting to go through that, right? So the next part now, so we focused on the basics of growth versus income investing. The next part you want to think about is now the differences that you want to think about now, right? With growth investing, again, you're looking at or trying to determine what's going to be a driver of that stock price movement, because as a growth investor, capital gains or capital appreciation is how you're going to make your money, right? So you want to find companies that are considered growth companies, and you want to do your research and due diligence to figure out what is going to be something that's going to drive that stock price forward, right? So if you check out our previous videos, we've gone through videos on how to read a profit and loss statement, how to read a balance sheet as a part of your research, right? Those aren't the only things that you have to do, but those are certainly some of the things you would do. So for example, what I do when I'm looking for a growth stock, I look at the P&L first. If I'm looking for an income stock, I'm looking at the balance sheet first, and then of course I'm looking at the P&L as well, right? So there are different things that you may look for as a priority when you're doing your research. So you have to make a decision first as to which one you want to do. All right. So growth stocks. So the way that I define them, again, there's some nuance to it as in what I look for. This is my definition. So of course, there may be others online or you may have your own. A growth stock for me is a company that is able to grow their top line. And when I say top line, I mean revenues or sales, and their bottom line, which is net profit or net income, is able to grow that. I would be comfortable with a rate of at least 20% or more per year. Right. So if they're able to grow their top line, let's say from 1 million to 1.2 or 1 billion to 1.2, they're seeing top line growth, because not many companies that are growth stocks are able to grow that much, right? So that's one of the things I look for. Just like I have the dividend requirement, I have a growth stock requirement as well. That's just a personal preference, because I want the type of growth that would be really attractive to me as an investor in terms of what I'm looking for, right? Bottom line also has to grow as well, and this growth for a growth stock, I'm looking for, something. Let's say it's a newly listed company. I'm looking for aggressive growth. I'm looking for growth on top line, expenses managed well, so they're able to realize more profits. The benefit for some small junior market companies that list is, for example, one of the things they don't do is pay corporate income tax for the first 5 years. So that usually helps with bottom line growth. All right. Growth stocks are typically more volatile, right? Growth stocks will typically move fast in either direction, right? So for example, you may see a growth stock, you purchase that stock maybe at an IPO, it may go up quickly, like 10%, 15%, 20%, but it can also go down quickly as well. As some of you might have seen with some IPOs in the past, right? It may go up quickly for the first few days, and it may go down quickly. So growth stocks are typically volatile in that way. All right. Next, with dividend stocks, you're looking at really consistency of income, right? So look for companies that are able to pay dividends consistently. It doesn't have to be quarterly. I think we have maybe only one stock that pays quarterly, or maybe some preference shares, I think, do that. But you're looking for stocks that pay you consistent dividend, at least I would say twice per year. Some pay more, some will be maybe once per year, twice per year, 4 times per year. That's usually the numbers, that I see. Typically, earnings are stable but still growing. And the reason why you want it to be growing is that you want to look for companies that can potentially increase their dividends over time, increase that yield, because as the price goes up, the yield will actually get lower, right? So if the dividend actually paid is not growing, then your yield will actually get smaller and smaller, which is something to think about as you continue to buy those shares, right? If you only buy once, like with a lump sum, then your yield will be fixed. But if you're doing something like dollar cost averaging, then you have to watch out for the fact that the yield may actually get lower and lower, right? These stocks are typically less volatile, but there's still some volatility, right? It may not move as wildly as a growth stock, but you may see some movement. You may see some upward movement around the time that dividends are announced, and you may see some downward movement after dividends are paid, right? These are just generalizations, by the way. All right. So that's another thing to think about. Hopefully this helps, right? So let me see if what I'm saying is making sense to you so far. If you have any questions, let me know. You can post them in the chat. I'll get to them as soon as I can. I see somebody here asking, what about the Mayberry bonds with the 10.5%? If you're talking the most recent Mayberry bonds, what you should look out for, I did start to read through that. I think there's a 25% withholding tax on that payout. I'll try to check it before the stream is done. But I believe that's what I saw because a client had asked me about it and we started to look at it together. So look out for that. I believe it said 25% withholding. Somebody can confirm in the chat for me. But at 25% withholding essentially means that you're not going to get the full 10.5%. You're going to actually get less in terms of income in your hands. So you can review it to be sure, but I believe that's what I saw, right? So that means you're not getting 10.5%. You're really getting closer to 7.5% in terms of yield on that per year. So just bear that in mind, right? So if that number works for you, then that certainly would be good for consistent income. It would certainly be above the 5% that I mentioned that I look for. Of course, if we're talking about bonds or preference shares versus dividend stocks, I typically go for dividend stocks because I get the benefit of both, right? So whereas a bond is fixed in price, the preference share can actually trade. So sometimes the prices may go up or down. It just really depends on the liquidity of those shares. But with a bond, you're getting a fixed value, whereas with a dividend stock, you can take advantage of some opportunities for some upside as well. So I typically have a preference for those as well. Again, personal decision, you can choose which works for you. As L.E.A.R.N says, yes, it's 25%. Yeah, because I saw that, and then my client was like, well, that doesn't make sense for them based on what they were looking for. All right, so just something to bear in mind. You always want to read through the prospectus before you make an investment decision so that you can be informed as to what is happening for that particular investment. All right. So I'm going to go into some more things and then we'll look at the NCB report. So just give me 1 second here. All right, so I think a couple more things I have in my notes here. So here are some questions to kind of ask yourself if you're trying to choose between the two. And these are the things I look at, right? So I invest for both, right? I invest for dividends and I invest for growth. My strategy changed late last year into this year where I'm prioritizing growth now, because I think the market is ripe for growth. And you might have seen it as well where, quite a few stocks have gone up more than 30-40% since the start of the year. So my assessment coming into the start of the year was correct. So I've been able to take advantage of some of those opportunities because I thought there were going to be some for growth coming out of the hurricane. And so that made sense for me to do at the time. Personal decision, of course. So think about the stage of life you're in. Are you looking to, for example, retire in a few years? So I had a client I was speaking to today who's planning for retirement. She wants to invest for retirement. And so, of course, her strategy would be different from somebody who is maybe their 20s, 30s, 40s, starting their investment journey, sure, but maybe they have a longer time horizon, all right? So think about that. What stage of life are you in? The next thing you want to think about is, do you want cash now? Do you need cash in the short term? If you need cash in the short term, then growth investing may be risky, meaning you may start with that $100,000. And if you don't choose the right investment, you actually may have less than $100,000 in the short term. So you have to choose your stocks carefully when you're investing for growth, because as we mentioned before, they're highly volatile, right? So if you need cash or you're prioritizing cash in the short term, then you can watch the last video we did where you can calculate how much you'll earn in dividends based on the yield. So you can maybe invest for income to maybe have some more predictable cash flow. And of course, you can calculate the yield and see how much you can expect to gain after taxes, etc. And then final question you can ask is, what is your risk tolerance, right? Because now I think that if you learn more, if you increase your knowledge, your risk is lowered, right? So stocks in general are risky. They have more risk than certain other types of investments, but every investment has risk. A bond has risk, preference share has risk, real estate has risk, businesses have risk. So the risk is always there. It's just what is your tolerance for it? How much can you manage, volatility? Because with the growth stocks, you will see, and I had the same client today had a growth stock in our portfolio that was down 60%, right? So that's something that you may have to deal with if you invest in growth stocks. So dividend stocks can fall just that much too. It just depends, right? Because we've seen stocks like NCB, for example, fall from their highs of 235 thereabouts back in 2019 to now lows of below $100, right? So dividend stocks, stable stocks, blue chip stocks, etc. All of those types of stocks can move in prices, just you're not likely to see the same dramatic change in a dividend stock versus an dividend stock versus a growth stock. All right. So now there's this thing that I used to do. Now I don't do it anymore, but it may be helpful. So in my mind, I'm like, why am I sharing it if I don't do it personally? But I mean, it's not for me to choose the style that you use. There's this theory that you can look at called portfolio theory, where they have online different kind of makeups of portfolio for you to choose based on your age, life stage, things like that, right? So you can look into that, but essentially it just comes down to asset allocation, which is something I do practice, asset allocation. You can think about how you want to allocate the assets in your portfolio, right? So for example, with that 100,000, you may choose to go in on all stocks. You may choose to buy bonds and stocks. You may choose to buy a unit trust and then a bond and then stocks. So there are different things that you can have in your overall portfolio based on how much you're investing, your age, and things like that, right? So always, think about your overall portfolio and what you want in it. Now, my particular approach is to start with stocks, and then after I build up my portfolio to a certain point, I take that cash and I put it in other assets. That's the approach that we've used, Renee and I, for a number of years. So we focus our energy and effort in getting great at investing in stocks. And then we've tried real estate with it. We've tried cryptocurrency with the cash. We've tried the US market. So we've been able to invest in other asset classes, starting with stocks as our primary go-to. So, what I say to persons is that when you're choosing asset classes, I would start with one, be great at that one, and then you can branch off into others. But when you have too many different things you're trying to do at the same time, you may not be great at any one thing, right? And I'd rather be great at something because that means I can maximize how much I earn. All right. So hopefully that makes sense. So, just something to think about as you weigh that. And then, of course, I wanted to touch on, before I go to the NCB file, some common mistakes in navigating, growth versus income investing, right? So I'll start with the income one. It's easier that way. So the first mistake I see is that persons don't always understand how dividend investing works. So for example, there were persons who called me, yesterday and today, asking me if they're going to get the Trans Jamaica dividend, based on the dividend announcement. So it was clear to me that they didn't understand how the dividend works, right? There's a video that we did on this. Again, you can watch the video. So when the dividend is declared, there are some things to focus on, right? So the first mistake is not understanding how dividend investing works. And this is a broad sentence to cover things like, understanding things like X date, payment date, understanding things like yield, etc., etc. So you have to understand how it works to make the most of it. Next, you want to think about not making the right decision based on your personal goals, right? So that's another mistake I see. Just because a stock price is going up or a stock is getting all the attention doesn't mean it's the right investment for you. So this could actually go for growth or dividend stocks, right? Don't just buy something because everybody else is buying it or talking about it. That may lead you into trouble, right? The third thing that I'll say here is that you may not understand the company that you're invested in, right? So things like not understanding the business model, not understanding how the company makes money, not understanding the company's cycles or the market that it operates in, that could have an impact, right? So for example, a few years ago, Dolphin Cove was one of the stocks that was in my portfolio. I was focused on getting dividends and income from it. If you were still holding a stock like Dolphin Cove, expecting to get the same dividends that they paid 2 years ago, 3 years ago, without understanding the factors impacting Dolphin Cove now, then you might have been surprised to see they only announced one dividend last year. They haven't yet announced any for this year so far. So you'd have been, expecting to get dividends from it and not seeing anything, right? So you have to bear those things in mind. You have to understand what's happening around the company itself to determine whether or not you're going to get growth from it or dividends from it, right? And then the final thing I'll say here, final mistake, is you don't necessarily have a clear strategy, right? I recommend, again, these are things that I've said on this channel over and over again. I recommend that persons build a portfolio of 6 stocks or less. I don't believe in diversification personally. Not with stocks anyway. I believe in diversification of asset classes, but not diversification of a stock portfolio. I think if you're starting out 4 to 6 stocks, your research would be simpler, your time would be more focused, and you could split these stocks, split these 6, maybe income versus growth. I mean, that really is a personal decision there, but you want to have a strategy going into it, right? If you look at your portfolio, it should either be that you are intending to do both, or it's clear whether or not you're prioritizing cash flow, or it's clear whether or not you're prioritizing capital gains. It can be both. I'm just saying you should have a clear strategy going into it, right? So that is what I have to say about the topics. I'm going to go to the NCB file now and see what we can get from it. Now, I have not read it before. Hopefully it is worth the read. So I'm going to share my screen, and it was sent out. I'll find out when it was sent, but if you subscribe to NCB Capital Markets research emails, they send it out maybe once per week. It's usually a good read for me, and I try to subscribe to as many brokers, their market updates, the things that they will send out just for me to keep understanding what's happening in the market, see their recommendations and things like that. All right. So let me know if you have any questions, because we're going to wrap up this stream in about 30 minutes. All right. So before I jump to that, I'm going to take a short break and talk about our upcoming conference. All right. So I'm going to play a video just once more, and then I'll talk about the conference for a few minutes, and then we jump back to the video. Right.
Are you a business owner ready to grow your business through content? Or are you a content creator who is ready to transform your platform for real profit? Then you need to be at Grow Your Wealth 2026, hosted by L.E.A.R.N, Grow, Invest. On April 18th, we're bringing together entrepreneurs, creators, and industry experts for a powerful one-day experience under the theme Grow Your Business Through Content Creation. This isn't just another conference. It's structure, it's strategy, it's monetization. You'll get practical tools to build authority with content, to convert your followers into customers, and to position your brand for long-term sustainability. Start your day off with a VIP exclusive breakfast session, then dive into a full day of value-packed content and Q&A sessions, and close it out with a mingle that is designed for real connections. If you're serious about growth in 2026, this is your room. Grow smarter, grow strategically, grow your wealth.
Right. I just love seeing Renee in the video here. So your conference is 8 days away. So it's April 18th. So that's next week, two Saturdays from now. And so I wanted to talk about that while I take a little break from the topic that we have here today. So this is the Grow Your Wealth website. So it's learngrowinvestconference.com. And this is where we have the details about the conference. Now, we've done this conference 4 years and counting. We started in 2022 with our online virtual conference. In 2023, we went hybrid. In 2024, we actually planned it, but we had to postpone it. So we continued in 2025. And so this year is our 4th year. And so this year's topic is grow your business through content creation. So it's really for 3 groups of people, right? So it's for founders, entrepreneurs who are trying to grow their business through content creation. It's for content creators who are trying to, monetize the fact that they're creating content. And finally, it's for maybe like an agency or a marketer or just, persons who are just kind of interested in a little bit of both, right? Content creation or business or both, right? So that's who it's for. We have a great lineup here. So you're seeing some of these names you may not know, but believe me, when I say that, these persons, we've heard them speak, they deliver excellent value in terms of their presentations. And if you've been to any one of our conferences before, you know that we deliver in terms of value. So the same value you get from our YouTube videos, you get that at our conferences, but it's even more, right? Because we usually find persons who are either at a high level of their field in terms of role, or they have a certain level of experience that you can actually get actionable things from what they say, right? There's a reason why we only give snippets of our conference, meaning if you watch, if you even check out the Grow Your Wealth YouTube channel, there are some clips there, very few full videos, because those pieces of content are more valuable than you'd think, right? I watch them for the past conferences over and over again. I take notes, I implement, because it's such, rich content and value, right? So I wanted to go over just the speakers quickly, and then I need to find the topics, right? So we have our host, who's Sophia Campbell, good friend of ours who has done an excellent job so far hosting our media launch. We have Luke Kwamina, who's going to be speaking on overcoming imposter syndrome. Now, that will even help those who are like investors, right? And usually what we try to do is, though our conference is focused on business, I like to say if you understand business, you understand investing, right? So I actually think everybody, even if you don't have a business, can benefit from our conferences, because if you understand business more, you understand investing more, right? Hopefully that makes sense to you. So he's going to be talking about overcoming imposter syndrome, something that I've dealt with, right? And that I know the value of overcoming it. Jared is going to be speaking about how to turn reels to revenue. So you're creating content, you may be not strong with call to action, you maybe don't have an approach to do it well. Jared will help us with that. I think if you're watching this channel, you should know Kalila Reynolds. Kalila will be talking about protecting your digital assets. So those assets that you have, like your YouTube channel, your IG page, your Facebook page, those are assets to you, right? And she's going to talk about the things that she has experienced and the things that she's learned to help her, protect those. We have Jace Mary, who's going to be going through content creation 101. So if you always wanted to create content, but you don't know how to get started, Jace is going to help us go through that. Wayne Nelson is a marketing strategist who's going to help us to craft a strategy behind our posting of content, right? So it's not just, just doing, first thing that comes to mind, but having, a targeted approach to that. I'm going to be speaking, well, let me save my topic for last, because I sent out an email about it today. Let me know in the chat if you got the email I sent out today, and let me know if it was helpful for you. And I'll go to everybody else and talk about mine last. Tony and Mackenzie is going to be a part of our panel. So these last 3 persons here, along with Tony and are going to be a part of our panel. Really ask me anything about content creation. So those, persons are going to be talking about it. Joel, Alia, and Renee, our CEO. So that panel should be very insightful as well. It's really to capture everything else that we didn't cover in terms of the topics, because we know, questions like how to use AI, how to, monetize a certain way, how to work with, persons for creating content, all of that good stuff. All right. For my topic, I'll be covering how to make money with digital products. So let me know if you got the email I sent out today. Did anybody in the chat see it? I got one email so far where the person said to me that they got so much value from the email in that they learned. I shared in the email the strategy that I use to make 1.7 million in, just from my course, right? I did this LinkedIn learning course about 2 years ago now, 2+ years ago, about 2 years and 4 months ago. That has been giving me between 200 to 300 US to my bank account every month, just because I would have set up this process, right? So with digital products, you create it once and you're able to sell it over and over and over again, right? So the concept behind it is that you can take your expertise. So I'm going to give you the highlights of the email, then we'll get back to the video, right? So you start with identifying your expertise. So in my case, what I was doing for my 9-to-5 job is teaching people how to use Microsoft technology. So I was a Microsoft certified trainer, a Power BI trainer, an Excel trainer. And so, I thought one day, it would be good to actually create a course and then sell that course. But then I'm like, what's the best way to go about this? So after doing my research, I really liked working with LinkedIn, the platform. I was, building some good connections there. So I decided to look into what it meant to be a LinkedIn learning instructor. So I connected with some people, got some introductions, got to sign on with them to do the course. They paid me 1,500 US as a deposit before I created the course. It took me a while to create the course, but that was because of imposter syndrome, right? Because I remember going through it feeling like, who's going to listen to me? Nobody's going to find value in this. I'm not that good. I teach it, sure, but I'm not great at it, all of the things. And of course, I've had maybe about, let's say, 95% of the feedback on the course has been great. Persons like it, they find value in it. Of course, there was this one person who thought it was the worst course they've ever done, right? But of course, now I understand that, my learning style doesn't work for everybody, just like this YouTube channel doesn't work for everybody. So that will come with you putting yourself out there, right? But, I was able to get over that. It took me longer to do the course. Actual recording time was maybe about a month and a half. But from the time I signed the contract, actually delivering the course was maybe closer to 6 months, right? Because I had to go through the motions. When I finished the course, they paid me another 1,500 US, and then I got royalties every month, right? And I've been getting them since November 2023 till now, right? I think I got a payment last month. And so, I'm able to earn consistently from something that I did 2+ years ago. That's the benefit of digital products, right? So with a course, you can now, of course, update it from time to time and so on to keep the content relevant. But that's a perfect example of something that can become a passive income, because you build it once and you're able to sell it multiple times, right? So I'll be going through how to use digital products, not just courses, but other types of digital products to make money online, to scale your business. If you have a business, but if you're just somebody who wants to take advantage of your expertise, then this session will help you as well. All right. So that is the rundown of my session. To get your tickets, just go to learngrowinvestconference.com. We have 3 types of tickets. We have online access. So for those who are overseas, maybe you can't make it on the day because you have things or errands to run. That's $15,000 for the online ticket. General admission is 22,500, and all of the tickets have online access, right? It's just that some persons prefer to be in the room. We actually think there's great value of being in the room, but if you can't be in the room because you're overseas, out of town, etc., then you can get an online ticket. Once you have a general admission or VIP ticket, you will get online access on the day. But general admission will cover your meals for the day, access to the conference. It starts at 10 a.m., ends at 5, and then we have a mingle afterwards. Then for VIP, now VIP starts at 45,000. VIPs get a special session in the morning. So there's a VIP breakfast that you can be a part of as well. And if you have a group and you want to purchase 5 tickets or more, then you get a special price for that. All right. So if you're interested, be sure to check it out and you can learn more about it. It's, as I said, it's a week away. All right. So thanks for allowing me to go through that. It's longer than I thought it would be, but I think it was important to share that. All right. So before I get back, I see 2 questions here. Let me get to them. I bought PBS 10.5 per share from 2022. It pays dividends every 3 months, and I think it's for 15 years. All right, cool, no problem. I don't see a question there, so I figure there's none. Junior Marshall Hastings 723 is saying, what is the value of JMB 7.35 per share dividend price? I'd have to check that. I don't think I've ever purchased that. Let me check instrument summary. Can share my screen for those who may want to see where I'm going to go to check. So the price says here $3, and the dividend that they seem to pay, it seems that, but I think somebody was saying on the last stream that they pay monthly. So I think that's what we're seeing here as well. I see one for January. Well, I'm seeing multiple things here. It seems they pay maybe about 1 cent per month, but it seems to add up, because I think somebody was saying on the last stream that they pay monthly. Okay, so I think this person is saying yes, that's what they do. So so you'd have to pretty much, what I would do to calculate, well, I mean, the yield is kind of baked into the name, but it depends on the current price, right? And this person is saying for all the preference shares for JMB, they pay monthly. Okay, cool. All right, so I hope that answers you, Junior, for the question that you have. All right. All right, so let's have a look at the NCB document here. So this is NCB's market guide. From what I can tell, they email it out every week. And they did this one on March 24th. And as I said, based on the topic we're covering tonight, I thought I would read some excerpts from this. I've never read it before. I just saw the title of the email. It says dividends or growth, navigating dividend and growth stocks. So I thought it maybe could add some value to what we are discussing here. I hope it does, because I didn't vet it before. All right. So Junior, the 1 cent per month is, I mean, what I would do is look at the annual yield, because if they're paying 1 cent per month, that's 12 cents per year. 12 cents over $3 would work out to a 4% yield. I'm not sure what the original price was, but the current price is $3. So that's how I would look at it. So it may actually add up to more than 12 cents, because it's not exactly 1 cent, it's like 1 cent and change. So I would add up them all, calculate the yield, and then you'll see whether or not it makes sense for you. But just from my rough calculation, that's at least 4% per year, which is not bad. All right. Somebody's saying for preference shares, when they say redeemable, does that mean they repurchase them from you and you get your money back? Redeemable means, yes, that's what it means. So you'll typically see something like cumulative redeemable. So the cumulative means that if they miss a payment, you're going to get that on the next one or the next available chance they have to make that payment. So cumulative mean if they miss a month, you're still going to get it, or miss a quarter, you're still going to get it. Redeemable mean, yes, they can redeem those preference shares at any time. They have the right to do that. If you see perpetual, that means they're going to be doing it in perpetuity, right? So the PBS one is perpetual, cumulative, redeemable, I think, something like that. So that's what those terms mean. All right. Yeah. All right. So it says in an environment shaped, let me zoom in, because I know somebody's going to tell me that they can't see it. So it says, sorry about this. Okay, in an environment increasingly shaped by macroeconomic uncertainty, the principle of bird in the hand is worth two in the bush. What does that mean? Right? I need to ask for any of that, guys. A bird in the hand is worth two in the bush. Has gained renewed relevance for investors as they hunt for returns in these unpredictable times. The ongoing US-Israeli war on Iran continues to pose inflationary risk through rising prices of fuel, higher fertilizer costs, supply chain disruptions, etc. These risks threaten to compound local stock market underperformance, where the JSE Combined Index has already shed 12.5% over the past 4 years. Now, I was saying to somebody today that we've been in a bear market for like 5+ years now, right? Since 2020, since March 2020, we've been in a bear market, and we just have issue after issue. Beryl, then Melissa, now the war. So I also said to the client, of course, there's still ways to make money in this market, but just know that we're facing just one risk after another, right? So against this backdrop, investors are confronted with a strategic portfolio allocation decision. We were talking about that before. On one hand, high quality dividend stocks offer the appeal of predictable real income and relative stability. On the other hand, growth stocks present the potential for superior capital appreciation, albeit with greater risks and sensitivity to market sentiment. Albeit with greater risks, right? Of course, right? So stemming from a request from one of our valued clients, we will examine the core distinctions between dividend and growth stocks while also identifying companies that exemplify each category. The objective is to assess their relative resilience and suitability for portfolio positioning in current economic climate. That's awesome that they're doing that for one of their clients. I wonder if I can make a request as well. I mean, I have 8 brokerage accounts. I'm a client of almost every broker. So I wonder if they'll take a special request, right? For investors who prefer a bird in the hand, or in this case, reliable cash flows, as we said before, it makes sense to allocate a meaningful portion of their holdings to companies that pay high and consistent dividends. That sounds like something you've heard me say for a while. Dividend stocks will typically display earnings and cash flow stability for more than 5 years, as well as high dividend yields and payout ratios. That high is relative, of course. On the JSE, they mention a company called Carreras here with a dividend yield of 6.8%, Massive with 5.8%, Trans-Jamaican Highway with 3.7%, and GK with 3.4%. How GK yield at 3.4% again? I need to calculate that one. I don't think it was lower than the last time I checked. Maybe the price has gone down since I checked, right? Coupled, I think I have to go all the way back up here. Coupled with relatively stable cash flows over the past years, these stocks reward shareholders with healthy average dividend payout ratios of 97%, 44%, 84%, and 27% respectively. That 27% is GK, by the way. That's low, right? You notice the rest are doing above 40%. So, I mean, GK, you can do better with that dividend yield. Out there buying companies and doing other things when they could be returning some cash to shareholders. I'm a dividend investor, guys, bear with me. All right, supporting stable or increased dividend payouts to investors over time. Relative to growth stocks, the companies are mature in their respective industries and have little to no need to reinvest aggressively for growth, right? I was actually watching the Trans-Jamaica investor briefing last night, and it was saying, they've been around for 20+ years. I don't think I remembered how long they've been around, right? So they're certainly considered a mature company, being around for 20 plus years and generating. I think it also said in the briefing that they are in the top 10 earning companies that are listed, right? All right, so though some still reinvest for growth, dividend stocks are primarily focused on ways to optimize operations or find synergies. For investors who don't mind foraging in the proverbial bush for higher returns, whilst accepting higher risk and uncertainty, growth stocks may be appetizing. Younger or smaller companies that aggressively reinvest to drive earnings, often at the expense of dividend distributions, come to mind. Notable growth stocks on the JC include, but are not limited to, Fesco, RPL, Indus Pharma. Fesco quadrupled earnings between 2020 and 2024, and their 9-month figures for 2026 are up 44%. If you remember, Fesco went up the other day by about 40 to 60%, yet only paid dividends in 2 of the last 5 years with an average payout ratio of 13%, even lower than GK's just now, right? Instead, the company is pursuing an aggressive expansion strategy, which makes sense, right? They're not as mature as, I don't know how long they've been around. They've been around, I think, more than 10 years. That I know for sure. But they're still aggressively expanding, which makes sense, right? So one thing I didn't say before, I expect a growth stock is not even going to be announcing a dividend, right? It's good if they can and it doesn't compromise growth, but I'm not personally expecting a dividend, all right? In addition, the company has entered the LPG market, committing billions in capital investment to support this. Overall, has totaled $4 billion in capex against a mere $125 million in distribution over the period, right? Making it amongst the lowest in terms of dividend yield at 0.7%. Similarly, RPL prioritizes reinvestment over immediate shareholder payouts, right? Something that they have said, right? I think the next, so RPL has paid 0 dividends despite earnings doubling over the 2021 to 2025, spending around $623 million on capex. The company has directed significant cash flows towards aggressive capex, including the development of its Spanish Town Road flagship location and the acquisition of L.E.A.R.N LPG. This happened recently, which has effectively doubled its share of the LPG market. A very important thing to note there, which means more growth is coming, right? Indus Pharma has also been scaling aggressively into the US markets while advancing 53 new drugs locally, all right? This would position the company as a growth stock, as it is entering a significantly larger market with substantial upside potential. However, their expansion also introduces greater risk, given the presence of a larger, more established pharmaceutical players in the US market. Now, that was a lot just now. Let me say it in English for you. When you try to grow, the companies take on risk. That risk, so remember I mentioned that growth stocks can be volatile. If a company is attempting to grow, so in this case, they announced entering into the US markets from last year. There were delays, they had some challenges locally, things like that. They did not grow at the pace at which they were planning to grow. And so the stock, I believe, came down from highs of $4 plus to, I think, side today or yesterday trading at $2.66. So that's a lot of volatility in a very short time, right? So if you're going to invest in growth stocks, you have to be able to understand and appreciate that they're extremely volatile. And so the things that you are expecting to cause the stock to grow, if those things don't work out, then you could really be left holding a loss, all right? So I want to skip to the meat of what it's saying here. So it says dividend stocks can add real value through a steady stream of cash flows at yields that exceed headline inflation. With yields above inflation, they generate positive real returns, helping investors to retain their purchasing power. Meanwhile, growth stocks offset their negligible dividend yields with outsized price appreciation potential, which often exceeds the dividend yields being offered on the JSE if it materializes. This suggests that in certain cases, the trade-off may be justified. However, some stocks kill two birds with one stone. TJH, for example, has already appreciated by 51%. This is no longer the case, by the way. Those maybe about 20% of that appreciation has been eroded. So it's only appreciated maybe about 33% so far, because I think the price as of today is about $6.17, down from $7, right? To complement is 3.4% yield. So the yield will actually be higher now because the price is lower. An announcement of 27% increase in dividend payments. They also have further legroom for growth, given the government of Jamaica plans to expand the toll road network across the island, where TJH has the first right of refusal, right? So although dividend and growth stocks can generate returns, investors must weigh these opportunities against external threats and risks. While dividend stocks often have more stable cash flow, they aren't immune to the shocks such as the US war or the fallout from Hurricane Melissa, right? I think they're pretty much, tying neatly with about some of the things I've said, right? All right, so let me see if you have any comments or questions about what I read there. All right, so Junior says if it's 1 cent per month, then that would be 12 cents per annum before income tax, not 4 cents. I did not say 4 cents, I said it was 4% when I calculated the 12 cents over the $3. As I said, it's more than that, though that was an estimation. Memer says, how do I check what price they were issued at so I can compare that to the price I'm buying at? The issued price is not going to matter. When you're calculating yield, calculate the price you have paid or are going to pay, right? I wouldn't worry about the issue price there. Since we are in a bear market, how does waiting in the long term and unforeseen inflation help one portfolio grow? Is that, I'm not sure the context of your question, Rosewell. Maybe say it again, say it a different way. I'll try to answer. Also, this NCB article seems useful. Yeah, so you can subscribe to their market guide. I think you have to be a Cap Markets customer. I'm not sure. Maybe you can subscribe to it on their website. All right. They are not taxed as it regards to the JMMB preference share. Okay, I'm not sure. Ask JMMB. I would not be sure. David Rose would know, but yeah, I should ask him. So dividends for all preference shares are fixed per annum, but ordinary shares have random values every quarter. Is that a question or a statement, Junior? Let me know. Which bank or licensed securities dealer sells a GOJ 12.5% bond or GOJ 11.875 bond? I think I need to look into that JSE bond, the GOJ bond thing that was released the other day. I'm not sure if you can do it on JTrader now. I need to check. I didn't read that article, but usually if it's a GOJ bond, you can access it through most brokers. That's usually how that works. If it's available through the GOJ, then most brokers can allow you to buy it if it is that it's still being sold. RPL was trading at $3 2 years ago. It's trading at $4.50 now. Why not take that appreciation? That's significant, while a company not ready to pay a dividend, take profits and compound portfolio by 7%. Roswell, you're speaking from a position of hindsight, right? So capital gains aren't guaranteed, right? It's good to look at RPL now and say 2 years later, it has grown. But when you buy a growth stock, you don't know, right? It's not always possible to know what the future holds for that company, right? That's one of the things we teach in level 2, where the reason why we highlight the volatility of a growth stock is that it's not guaranteed, right? So for example, look at the situation with indies. Sometimes the things that you do to plan to grow are hindered by forces that are outside of your control, right? Meaning in this case, the tariffs and the blockage in the US, the GOJ or the government issues in terms of clearing some of their goods and stuff like that has posed challenges to them that I'm sure they never anticipated, right? So growth is always better once you can select those stocks, because typically growth is going to come, double digits or more, right? The only issue for brand new investors is whether or not they know how to select those stocks, right? So in your case, you may be a little bit more experienced. I'm just saying it's not automatic, right? The inflation from the war will affect some companies, so the next quarter financial may not look, and some depending on the industry, for sure. I agree with you on that. The GOJ bonds are out for public to purchase. I think there's always something. There's always something out from the GOJ, if I'm not mistaken. You can ask your broker about it. I personally don't buy bonds, so I don't track them. All right. If it's available, any broker that you work with should be able to give you information on it. All right. Rasheen is asking, isn't it a good idea to have a mix of growth for upside and value income for cash flow and stability? So by the way, for me, Rasheen, I don't call value and income the same. Value stocks, I think, are, when I hear value stock, I think undervalued. So they're considered undervalued based on some metric like PE or something like that. Those stocks aren't necessarily a dividend stock for me. So just clarifying that there. You could do a mix of both, sure. Again, it just depends on what your priorities are. It's subjective. It's based on what the person wants to do, right? Talga is asking, where can I find the article to read? So it was NCB's market guide. Let me check to see if I can do a Google search and you can find it. Let me look. I'm going to search for NCB market guide. I don't know if they have it on their website, right? Sometimes they do weekly market guide. I see this here saying 2023. They used to have it on their website. I'm not seeing it here. If somebody is from NCB, let me know if you can guide us as to how to get it. It seems to be doing it in order here? Let's say September here. So maybe they post it to their website after. I know that I'm subscribed to it, so it sends it to me. I don't remember how I got subscribed. So it's the weekly market guide. I think you just reach out to them and they will add you to that list. But I do have an NCB Cap Markets account. I don't know if that's how I'm getting it, but yeah, I don't remember. It's been a while. I've been getting those emails for a while now. All right. Jermaine, what I meant is waiting for the long term may not build a portfolio in terms of appreciation. Long term at times tighten liquidity in the market according to one financial assessment. Okay, yeah, man, for sure. Are mutual funds worth considering as a newer investor? I see your video on it, but haven't gotten into it. So mutual funds are very diversified if you understand what comes with a diversified purchase as a new investor. I mean, again, personal decision. I think starting with individual stocks are best because you get to understand how it works. If you choose to go to a mutual fund after that, it's up to you. But what we teach and encourage persons to do is to own individual stocks, learn how they work. Of course, we have classes that teach you how to do that, so you'll be able to determine which one is right for you in terms of which stock. But a mutual fund has pros and cons. If you're familiar with both, then you can make a decision to do which one works for you. All right. So hope that answers your question, sir. I don't see any other comments at Talga. Hopefully, I'd say message us on IG. I'll try to find out if you can either subscribe to it or something like that. But I know it's on their website. They seem to upload it after a while, but I haven't seen any since September last year. Well, no, October, November. So it could actually be there, but not in order. So maybe it is there. Let me search. Well, I'm seeing some 2026. So Talga, it is there. You probably just think, so why is it not in order? That doesn't make sense to me. All right. So I think it's there, Talga. Just search NCB Market Guide, and you'll be able to find it on the website I was showing just now. All right. All right. Interactive brokers asking for other that allow Jamaicans to overseas markets. Can you rephrase that question for me? 40 cents or 60 cents on the dollar make a huge difference, especially with the junior market stock. I see those stocks book at 35 cents on the dollar and go back down. Okay, I'm assuming you're talking about like RPL and Fesco. Is that what you're saying? JMB and NCB Capital Markets told me that they don't sell GOJ bond. I wonder if JN fund managers. Well, so here's the thing, Junior. If they told you that they don't sell it, why not ask them to tell you who can? GOJ bonds goes up to 2050 unlike corporate bonds. I mean, I don't know if I would purchase a bond for 24 years. I don't know if I would do that because the rate of inflation is likely to be so different. So for example, I have a client who has bonds going up to 2040, 2050, paying 3%. To me, I don't know if I would do something like that. That wouldn't make sense to me to have something paying me 3% a year for the next 20 years, 30 years. I don't know if that is practical. But again, I've never bought a bond. I'm not. They say that when you want to maybe, as you get older, you focus on instruments like bonded. I mean, the bond market is the largest market in the world, right? So yeah, but yeah. It's another conversation for another day. Talga says, thanks, I'm seeing it. The last one is March 31st, so maybe so the one that I was looking at is March 24th. So if you see March 31st, then March 24th is there. So actually see it here. I see it here. The one is here, March 24th is on page 5. So that will help you, Talga, get the information that you need. Phil, hey Phil, it's been a minute. But isn't the point of listing them to increase liquidity so you can trade them? Yes, for sure, Phil. For the bonds, sure. What I would say though, I don't see necessarily great liquidity for all of them that have been listed. I mean, same for like, preference shares, etc. The point of listing them is certainly that, but you're not always going to see the type of volumes you're looking for. I guess it depends on how much you want, right? The bonds are listed, so they will be tradable for sure. Yeah, man. We've seen that happen for the last few years. I know Mayberry, their bonds are always tradable and things like that. Yeah, man, for sure. I agree with you. We'll get there. I mean, we have to start somewhere. Certainly, for sure. JAMT is 2.2 bid low, 225 high, 2 million units. How much profit school taught us? How much profit school taught us? Volume application here matters. Okay, Rose, well, speak in English. I think I understand what you're trying to say, but I can't read your mind. Okay, are you talking about the fact that 2 million units, how much profit? I mean, can you speak to me like I'm 5, right? Help me to understand what you're trying to say. I feel like you're trying to make a point, you're going somewhere, but bear with me, all right? Say it in English for me, please. If you have a point, I'll gladly state it, but if you want me to state it clearly, I have no problem with that, but I'm not getting what you're trying to say. I'm not picking up what you're putting down, all right? So break it down for me, all right? All right, so I want to thank everybody for being here with me at 10:44 on a Friday night. I haven't done one of these streams in a minute. I was going to go to church for men's ministry, and I said, well, I'm a little bit tired. I want to stay home. And So here I am. All right. So I'm not seeing any more questions. So I will end the stream here. I hope to see you at our conference next week. I'm also going to be visiting Montego Bay later this month. So we have a poll in our community, asking if you're in that area and will be able to attend. So if you're not in our level 1 community, the link is in the description over on YouTube to join. It's completely free to join our level 1 community. You can take our level 1 course to get started investing. And of course, if you have any questions, you want to share anything in the community, you're free to do so. And Roswell, I'm going to wait another minute or two for you to share what you're sharing again, because I want to get the point that you're making before I end the stream. Junior says some people are at Carnival Mass Camp tonight. I wouldn't know. I know that this time of year I'm typically not as active on social media as I usually am, because like every other story is Carnival stuff, and I'm trying to keep my eyes sanctified, right? Glad to see you live from, okay, cool. So we are going to be, is it Freeport? Freeport side. The church that we're going to be at is Trumpet Call Ministries. I don't remember their address, but Trumpet Call Ministries, they've offered us the ability to use their space for our meetup. So that's where it will be. So look for Trumpet Call Ministries. You'll see the address. That's where we'll be for that meetup in Mobay. We want to try and have more meetups across the country. So we'll do polls from time to time in the community, see where persons are. Maybe we'll have one in Ochi, maybe we'll have one in Portland, maybe we'll have one in St. Thomas, just to kind of do like a tour, a worldwide tour, who knows. Yeah. All right. So I think you're not going to say anything, Rosewell. Maybe you're not going to rephrase because I see you type something else. If not, just post it in the comments and we'll say, Talga is asking, is this a level 1 meeting? No, it's just a general meeting. All levels are welcome, right? If you're asking about the meeting in Montego Bay, all levels are welcome. So Talga, you can join the level 1 community. It is free. The link is in our bio on Instagram. The poll is there. We'll share the details via email and in the community. So once you're subscribed, you'll see it. And if you're in Montego Bay, I definitely would love to see you. Diane, wow, I haven't seen you in a minute, Diane. Hopefully you are well. Hopefully you got that thing sorted out that we spoke about last year. Maypen, where's Maypen? Do I know Maypen? Where's Maypen? Oh, Mandible, okay. Yeah, man, we'll do Maypen at some point. We can do maybe, so if I do it in Mandible, Diane, that works, because we have some friends in Mandible. We can maybe do that. Okay, 1 million times 2 million. 35 cents of the million gives us 350,000. You're still like, okay, I get that. Can you say your point in a complete sentence for me to get what you're saying? Jermaine soon covered. I mean, so here's the thing. If we have, the Bible says we're two or more are gathered. I say if we find at least 20 or 30 people in a place that can get to a particular location, I'm willing to have a Learn, Grow, Invest meetup. It doesn't matter where in Jamaica. We'll schedule it in advance. We'll drive there because we want to meet you in person. We want to, shake your hands, get to see you, get to know you, and build a connection that way, because it's easier for you to participate virtually after you've met us physically. All right, because there's a lot of you on YouTube who I've never seen before, and some of you, when you see me in public, you'll say hi, but you don't tell me your name, you don't message me, so I don't necessarily know who I'm saying hi to, right? So when you see me, just say, Jermaine, it's so and so. So Jermaine, it's Diane, or Jermaine, it's Chess King Davis, or Jermaine, it's Rosewell. So I know that, so I can put a face to the name. All right. All right, so okay, so Talga say yes, come to St. Thomas. Yeah, man, I've been to St. Thomas before, so we can have a meetup out there for sure. So all we need is a location, right? So if you have a location in your parish that is safe, that is that will allow us to have facilities like food nearby, a bathroom, AC would be good, or somewhere outdoor that's cool. Then we can meet there for the evening and then maybe either stay in the parish or drive back to Kingston. Just let me know. All of this is best to discuss inside the community though, so I can coordinate that with you. But it is my commitment to meet as many of our community members as we can. So certainly if you want us to come to your parish, just as I said, I'd have to have at least 30 people, right? So when we do the poll, if we say, okay, we want to go to St. Thomas, would you be interested? And we do that poll. If we don't get at least 30 responses to say yes, then we're not likely to make that. For now we have 2,800 persons in our community. So I'm assuming we may have that for each parish, just whether or not the persons will respond to that poll. Usually we give it at least 2 weeks to a month, all right? Because we did the poll already this week and we're going to be in Mobay on the 24th of this month, all right? So just bear that in mind. All right, so let's see now. I meant to say that 35 cents on the dollar. Once I'm doing volume, I will take that 35 cents on the $2. So the math says 35 cents for every $2. Let me just say that I understand you. The point I was trying to get to is that I'm not sure somebody else following this conversation is getting you, but I'll leave it. Thank you for that, right? Hopefully that's clear for everybody who's reading it. Which bank in Jamaica has the best certificate of deposit rates? Why, Junior, you're asking questions that I can't answer? I'm an equities guy. I'm a stocks guy. Ask me anything about stocks, I can tell you. Fixed income. I remember when I did the interview at Sagicor for a research analyst, and they said to me the reason why I didn't get the job is that I wasn't good with fixed income. I'm not good with fixed income, right? I do plan to do my CFA to hopefully get better at that. But for now, I can't tell you which bank has the best rates on CDs because I don't track them. I don't purchase them. So I can't tell you, right? That's something that, again, maybe somebody like a David Rose would know. So here's what I'd say, Junior. I would love to answer your question. Post it in the comments under the video and I'll try and get the information for you. Let me try and bridge the gap there, because you asking could be a signal that other persons are interested as well. And I certainly want to answer your question. So post them in the comments and I'll try to get you a response to them. All right. Let me make that commitment to you to see if I can help you. All right. Roswell said, I'd love to meet you and family in person. Yeah, man, for sure. So Roswell, message me. Let me know where you're from. We're going to do a meetup in Montego Bay. We're going to have the meetup at our conference. We're having a meetup with level 3. We're going to have an in-person meetup for level 2, maybe around summer. So yeah, man, just let me know. We'll meet. We used to meet at Emancipation Park, but I didn't like how after hours it felt a little unsafe to have persons going home, 9:30, 10 o'clock, 10:30, when it got so dark, so quiet. Not that anything happened, it's just the feeling of safety for, young women or young men going home. I don't want that. Send me the name of the church. The name of the church is Trumpet Call Ministries International, I think. So that's where we will be. So we'll send out, I know we'll post it in our community and via email. So if you subscribe to our email list, you'll see the notice when it comes out. So it'll tell you exact date and time. All right. All right, everyone, enjoy your weekend and I'll see you soon. Again, tickets to our conference are available. It's next weekend, the 18th at Shortwood Teachers College. Follow us on social media for updates. We've been sending out emails about it as well. So if you're interested, be sure to check that out. And I'll see you again soon.
Are you a business owner ready to grow your business through content? Or are you a content creator who is ready to transform your platform for real profit? Then you need to be at Grow Your Wealth 2026, hosted by Learn, Grow, Invest. On April 18th, we're bringing together entrepreneurs, creators, and industry experts for a powerful one-day experience under the theme Grow Your Business Through Content Creation. This isn't just another conference. It's structure, it's strategy, it's monetization. You'll get practical tools to build authority with content, to convert your followers into customers, and to position your brand for long-term sustainability. Start your day off with a VIP exclusive breakfast session, then dive into a full day of value-packed content and Q&A sessions, and close it out with a mingle that is designed for real connections. If you're serious about growth in 2026, this is your room. Grow smarter, grow strategically, grow your wealth.